Hello, traders. In this edition of your weekend video newsletter, we'll address the recent market weakness, the causes, and what we might see in the short term as we discuss the stocks and sectors currently taking a leadership position last week.
There you go.
We did see rotation into the materials, metals and mining, construction and builders, healthcare, and consumer discretionary sectors last week, with XLF fading and seeing some rotation out of real estate, tech, and semiconductors. Currently, the XLY XLP ratio is still bullish, so we'll look at these stocks below as potential trades for this week. It's a short list due to the mixed signals we got last week with 7 bullish, 7 neutral, and 6 bearish to start this week's trading. S&P 500 faded last week due to the large OPEX call positions that expired, in addition to what we saw to begin the week, where decay kicked in and the weakness that we were looking for remained persistent into Friday. RSI continues to fade, MACD and stochastics have all rolled over, so there is a potential for more weakness and a test of the 21-day this week, or a test of 4,300 for a potential long position into the JP Morgan collar that rolls out on Friday. The FANG stocks, on the other hand, did manage to hold on to the 9 EMA, closing right at that level on Friday, as Meta, Apple, and Amazon managed to hold on to their leadership positions, trending along its 9 EMA since breaking out in March. In addition to Amazon's news, with the company investing $100 million in generative AI in its AWS to keep up with Microsoft and Google last week, helped propel the stock higher on Thursday. We had an inside day on Friday. We'll look for that to continue this week. We also had Adobe reporting growth from new AI services. With a pop and a drop back down to the 9 EMA, volume has been stellar, with Meta platforms gaining over 6%, still trending and headed for the 300 level, with the stock breaking out in 2023 back above its 10 EMA. Phase 2 underway with overhead targets near 360, 350 in the short term as potential targets. At the same time, we did see small caps pull back last week, headed back towards the 200-day level. That 180 zone is a pullback to breakout. We'll look for a bounce this week. MACD and stochastics both rotating lower along with RSI. So if IWM can manage a bounce this week, we'll watch some of these small cap sectors for indications that we might see a bounce. Small cap energy was one of the only sectors in the small cap universe that managed to show a little bit of strength on Friday. All the rest pulled back, with small cap consumer discretionary the only small cap sector that remained above its 21-day moving average on Friday. Breath as well retreated back below the zero line, so we'll look for a bounce here. As the market faded last week, it was confirmed by numerous stocks selling, setting up a potential bounce and buy points for us in the short term. The same could be said for the New York Stock Exchange McClellan oscillator, peaking with a lower high. We'll look for these lower highs to get broken at some point into the second half of the year, as it appears this fade could last a bit longer before setting up a valid buy point. Finally, we have VIX moving to lows that we haven't seen since 2020. On this monthly time frame, we can see that the S&P 500 is still in an uptrend, with stochastic oversold on the monthly, and there's a potential for a bounce in the short term, given the fade in volatility. Add to that the appearance that institutions are unwinding their hedges. We're back down to 135 from these highs near 158, 160. over the last several weeks. So there's a potential for this unwinding to lead to some buying. All of the things that we need to watch for as we start the week a bit more cautious and hoping for the best. As stocks continue to outperform commodities, with the S&P 500 in the upper panel above its 12-month moving average and turning higher, this outperformance confirms that we are in a longer-term bullish trend that started back in October last year and followed through into 2023, with tech stocks leading. At the same time, we see rotation into materials, metals and mining, consumer discretionary, and home builders. We've seen money coming out of high yield and junk bonds, as well as real estate, REITs, technology, internet, and semiconductors. So we'd like to see this improve and turn back to green over the next several weeks. Same thing can be said for international markets, with Brazil and Argentina trending and following through. We also had Greece moving higher over the last several weeks. Bottom line, the New York Stock Exchange 2,700 stocks gave us a sell signal going into Tuesday trading last week and continues lower, looking for a bounce in the short term as volume shows signs of pulling back along with deterioration in breadth. Bottom line, we are cautious going into this week and looking for sectors like healthcare to continue with rotation into pharmaceuticals, medical devices, with Merck moving back above its 50-day moving average, RSI rising, volume increasing, MACD crossed, and stochastics rising. We'll look for stocks like Merck to follow through, along with Lantheus Holdings in the medical imaging, pharmaceuticals, and diagnostics industry groups. It held onto its 50-day, showed relative strength as the markets pulled back, along with Amphastar Pharmaceuticals, which was on the watch list 3 weeks ago. That followed through on the breakout last week. Volume picked up, with the healthcare sector remaining above its 50-day moving average, MACD rising, and RSI above 50. Look for healthcare to continue this week, in addition to home builders, which is trending along its 9, 21, and 50-day moving averages, showing no signs of retreat in the short term. These improving sectors moving to the leading sectors and catching up with consumer discretionary and industrials in the coming weeks. The US dollar also remains in this range with highs and lows noted. If you're bullish equities, in particular tech stocks, you want to see this reverse and move lower. If we continue this upward march back to the top of this range, anticipate that we could see a fade again this week in tech stocks. And we'll also keep an eye on the 10-year yield, which remains in this sideways pattern for the last 3 weeks. A move lower is bullish for tech stocks and stocks in general. And a move higher would be bearish for equities overall. Crude oil has been marching lower. That's bullish for the economy, as consumers will have more money to spend, with West Texas and Brent both moving lower, along with gasoline back below its 921 and 50-day moving averages. All of the oscillators turned lower to end the week, while natural gas showed potential for a break to the upside. Notice the volume. Just judging by this volume, I'd be watching this over the next several weeks to see if we can't get some acceleration in the price of natural gas into the summer. There are fewer IBD 50 candidates that look good for a follow-through this week. I did note that Carnival Cruise Lines, Royal Caribbean, and Norwegian Cruise Lines were all set up as these travel and leisure industry group stocks continue. On the breakout from 11, with Carnival rising up to 16 and consolidating for the last week, we're looking for the 9 EMA to catch up. It's not shown. This is the 21-day and the 50-day. Watch for the 9 EMA to catch up with price. See if we can't get a follow-through. Volume has looked pretty good, with cruise lines getting an upgrade about 3 weeks ago. these look like they could continue higher. Eagle Materials been on the IBD 50 list for at least 2 or 3 months now. Continues this bullish trend. Looking for a follow through. Lantheus Holdings from the healthcare group we just got finished discussing. Look for a follow through here as well. Royal Caribbean, Norwegian Cruise Lines, Carnival, all three are moving higher. Uber trending since breaking above 30 a couple of months ago. We're looking for this to follow through as it takes over market share from Lyft, reporting better earnings. Workday is also trending, very strong, riding its 21-day moving average, consolidating at 220, looking for a break higher. With Workday seeing increasing volume as the company incorporates machine learning into its processes. Higher highs and higher lows, 921 50-day pointed up and to the right. RSI is strong. MACD and stochastics are a bit overbought, but volume did pick up on Friday and it is showing relative strength. These are stocks from IBD's relative strength at new highs scan. Many of these were just discussed. Celsius Holdings continues higher. We did see Monster Beverages with some action last week. DraftKings still trending. In addition, we had stocks on a scan that looks for stochastics oversold and turning. All of these fit the bill. Looking for Chewy to follow through with stochastics starting to turn. Mueller Industries, MLI, with a nice pullback to the 21-day. Big pop on volume on Friday. Watch for this to turn higher, along with stochastic. And some of the credit card companies, Synchrony Financial, I believe they take care of home goods, TJ Maxx, and Michaels, among others, with their store credit cards. Looking for Synchrony Financial to hold the 21-day and for stochastics to turn back up as we start this week with a bit of caution. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on Sunday, the 25th of June, with your weekend video newsletter. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend. Take care, and we'll see you in the morning. Ciao.